Short exercise 22-11. We're going to create a cash budget. So the name of the company is Booth Company. So Booth has $12,500 in cash on hand on January 1st and has collected the following budget data. So we've got sales, we've got cash receipts from customers, cash payments for direct material purchases, direct labor costs, and then manufacturing overhead costs. But this includes depreciation of $900 per month. Now remember, depreciation is a non-cash transaction, and since we're working with a cash budget, we will have to back that out when we get to the manufacturing overhead costs. So assume direct labor costs and manufacturing overhead costs are paid in the month incurred. So in other words, these direct labor costs of $135,010 were paid fully in January, and $113,348 was paid fully in February. None of it carried over to the next month. Same with the manufacturing overhead costs. $55,058 in January, $53,922 in February. Now that was the amount spent. However, again, I need to reiterate, this depreciation of $900 a month is a non-cash transaction. Remember, when we record depreciation, cash is not involved. But because it's included these manufacturing overhead costs, to calculate the amount of cash that actually changed hands, we'll have to back that depreciation out of the manufacturing overhead costs. Additionally, assume Booth has cash payments for selling and administrative expenses, including salaries of $40,000 per month, plus commissions that are 1% of sales. And it's all paid in the month of the sale. The company requires a minimum cash balance of $20,000. So at the end of the month, if we find out we don't have $20,000, we need to borrow some money to get it up to the minimum of $20,000. So prepare a cash budget for January and February, round to the nearest dollar. Will Booth need to borrow cash by the end of February? So I'll begin by preparing the cash budget for January, and then we will do the cash budget for February. Complete all input fields, enter a 0 for any balance, and again, round all amounts entered in the cash budget to the nearest whole dollar. So we need to start with January. And our beginning cash balance is this $12,500. Next, we need cash receipts. That's already calculated for us. So our cash receipts, $443,000. Cha-ching! So if we began with $12,500 and we received $443 of cash from customers, the amount available, the cash available, is adding those two, $455,500. $455,500. Now we've got cash payments. So cash payments of direct materials, we've got that calculated here, $180,624. Direct labor costs. Now remember, it said the direct labor costs are all paid in the month incurred. So we're going to take this whole amount, $135,010. And then we've got manufacturing overhead. Now we can't take all of this because remember, this is a cash budget. So we're only looking for stuff that affects cash. So this is telling us right here, this is telling us that this is all cash except for depreciation of $900. So we have to back out depreciation from that. So we're going to take $55,058, $55,058, subtract $900 of depreciation, and the amount of cash that changed hands for, or that we spent on manufacturing overhead is $54,158. Next, we've got selling and administrative expenses. So remember, selling and administrative expenses include $40,000 per month plus commissions that are 1% of sales. So sales, we're going to take $529,000 times 0.01 equals 5,290 plus 40,000 gives us 45,290. And here's the calculation right here. Formula, 40,000 plus 1% of sales. So 40,000 plus 1% of 529,000 equals 45,290. So now we have to figure out our cash payments. So remember, these are our cash payments here, so we're going to add this plus this plus this plus this. Gives us total cash payments of 415,082. So what was our ending cash balance if we had this amount available, 455,500, and we paid this? So we're going to take this minus this, should give us 40,418. And what was the minimum cash required? We required 20,000. Next, we need to calculate if we have an excess or a deficiency. Notice the deficiency is in parentheses, meaning it's a negative number. So we had 40,418. We require 20,000. So the excess is just the difference. So we got $20,418 in excess. Cool. So we have extra money. Remember, our minimum cash balance is 20,000. We've got way more than that. We've got 40,418. So do we need to borrow any? No. And if we're not borrowing any, our principal repayments will be 0. And there's no interest because we're not borrowing anything. So the total effect on financing is 0. So our ending cash balance is the same as this 40,418. Fantastic. Now let's do February. So the beginning cash balance for February is the same as the ending cash balance of the previous month. Copy and paste. So how much were our cash receipts? We had 502,200. So our cash receipts from our customers went up significantly. So if we began with 40,418, we received 502,200. We're going to add those. We get 542,000, 618. Purchases of direct materials, we've got 160,284. Direct labor, 113,348. Manufacturing overhead, we had 53,922, except we have $900 of a non-cash transaction, which is depreciation. So that overhead includes depreciation that did not affect cash. So remember, manufacturing overhead are things like the plant utility costs, the plant property tax, the plant depreciation, and depreciation on the machines. So those include cash transactions except for the depreciation of 900. So we're going to take 53,922 minus 900 gives us 53,022. Even I can do that math in my head. Next, we've got selling and administration expense, which, as we said up here, is 40,000 plus 1% of sales. So here's the formula. We got 40,000 plus 1% of the February sales. So that gives us a total of 45,680. Let me copy and paste that. So now we need to do our total cash payments. And here's our cash payments. We add this, plus this, plus this, plus this. And that gives us total cash payments of 372,334. Next, we need to figure out our ending cash balance. So we had cash available of 542,618. We spent 372,334. So we're going to subtract 372,334 from 542,618, and we get 170,284. And what's our minimum cash desired? 20,000, right from up here. Notice my accounting lab put a negative in there for us. Last time I put a positive number in there, so it doesn't matter if you enter it as a negative or positive. My accounting lab will turn it into a negative. So what's our excess or deficiency? We're going to calculate that, take our ending cash balance minus the minimum desired, and that's our excess. We got a ton of excess, 150,284. So our minimum is $20,000, and we've got 170,000, so we do not need to borrow. And if we don't have any borrowings, if we don't borrow anything, we don't have any principal repayments, and there's no interest, so the total effects of financing is 0. So our ending cash balance is 170,284. And last, it's asking us, will Booth need to borrow cash by the end of February? Well, we've got 170,284. Our minimum requirement is 20,000, so we don't need to borrow. We will not need to borrow cash by the end of February because the ending cash balance before financing is greater than the minimum cash balance required, which is 20,000. And that's it.